Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
All right, so we're going to take a deep dive today into this McGuire Woods report that you shared with me about single-family offices and direct investments.
Right.
You're particularly interested in the lower middle market.
Yes.
Those deals in the $2 to $50 million range.
Yep.
And this report seems to have a lot to say about it.
It does. It really does. We're seeing a definite trend of single-family offices, SFOs, wanting to kind of bypass those traditional private equity funds and invest directly in businesses themselves.
So why is that what's driving this shift?
Well, I think a big part of it is control. You know, SFOs, they want more say in where their money goes and how those investments are managed.
Yeah, gotcha.
They're also looking for, potentially higher returns.
Makes sense.
And cutting out the fund managers' fees can certainly help with that.
Yeah, for sure.
Okay.
So how are they actually making this happen? Are we talking about SFOs suddenly building these huge investment teams from scratch?
Not necessarily. The report highlights a few clever strategies.
Okay.
And one that really stands out is partnering with independent sponsors.
Okay, so for those of us who might not be familiar with the term, could you explain what an independent sponsor is and how they fit into this picture?
Yeah, so an independent sponsor is essentially a seasoned deal maker.
Okay.
Someone with a strong track record in sourcing and executing private equity transactions.
Got it.
They don't have their own fund.
Okay.
But they bring the expertise and the networks to find attractive deals, to structure them and manage the investment process.
So instead of building that in-house team, SFOs can tap into this existing expertise.
Exactly.
Right.
And the report quotes Douglas Blagden,
Okay.
who's the founder of Shorebridge Capital Partners, who points out just how challenging and expensive it would be for an SFO to replicate that kind of deal sourcing network on their own.
Right.
Building those relationships, that industry knowledge, it takes years.
Yeah, I can see how that would be a major hurdle for sure.
Yeah.
But wouldn't choosing the right independent sponsor be critical?
Absolutely.
You'd want someone who really understands your specific investment goals and your risk tolerance and all those things.
It's a partnership,
Yeah.
It's not just a transaction. You need alignment on values, vision, strategy.
Got it.
And that's why the report emphasizes the importance of due diligence, not just on the potential investments, but also on the sponsors themselves.
Interesting. So it's a two-way street.
Right.
You're vetting them as much as they're vetting the deal.
Absolutely.
Makes sense.
And this leads to another interesting point the report raises, the importance of prioritizing deal sourcing.
Okay, so you found a great sponsor.
Right.
But what's next?
Well, even with a strong network, success hinges on finding high-quality deals that fit the SFO's criteria.
Right.
The report quotes Lee Cornwell of Cornwell Capital, an SFO actively making direct investments who stresses the need for discipline.
Okay.
He talks about sticking to your investment thesis, knowing when to say no quickly and not getting swept up by the hype of a particular opportunity.
Right. I can imagine that's tempting.
It is.
Especially in a competitive market.
Yeah.
Yeah.
But remember, the goal for an SFO is to preserve and grow wealth over the long term.
Right.
That requires a strategic approach,
right,
not chasing every shiny object that comes along.
So discipline in that sourcing phase is just as crucial as having a good partner.
Absolutely.
This report is really starting to paint a picture of what it takes to succeed in direct investing.
It is. And another key element is understanding the nuances of structuring these deals.
Okay.
Direct investments are more complex than simply buying shares on the stock market.
Yeah.
There's due diligence, negotiating with sellers, securing financing, potentially managing a transition period.
Whoa. That sounds like a lot to handle.
It can be.
Especially for an SFO that's relatively new to the space.
Right.
Yeah.
And that's where the report brings up another strategic approach, co-investing.
Okay, this is something I've heard about, but I'd love to hear more about how it works in practice.
Sure.
Especially in the context of direct investments.
Yeah, essentially co-investing allows an SFO to partner with a more experienced investor, someone who's already navigated these complexities.
Got it.
It can be another family office, a private equity fund, even a high net worth individual.
Okay.
The idea is to share the risk, leverage each other's strengths, and learn from the process.
So it's like having a seasoned guide.
That's a great analogy.
To help you navigate this new terrain.
And the report specifically mentions Douglas Blagden again, who points out that co-investing with another family office can be particularly advantageous.
Why is that? What makes that dynamic different from, say, working with a traditional private equity fund?
Well, family offices often have similar investment horizons and a shared understanding of the unique challenges that come with managing multi-generational wealth.
Right.
There can be a greater sense of alignment and a more collaborative approach.
That makes a lot of sense.
Yeah.
It's about finding partners who are truly on the same page.
Right.
Not just in terms of the deal itself, but also their long-term vision and their values.
Exactly. And this brings us to another interesting point.
Okay.
The role of industry knowledge in direct investing.
Okay. I'm intrigued. What's the connection there?
Well, the report highlights that SFOs often have a built-in advantage in the industry where their wealth originated.
I see.
They might have deep expertise, valuable connections.
Right.
Even a unique understanding of market dynamics.
It's like that saying, invest in what you know, but take it to another level.
Precisely. And Brad Batten, partner at Zwick Partners, an SFO that's been very successful with direct investments, reinforces this point.
Okay.
He encourages SFOs to leverage their existing knowledge and relationships to gain a competitive edge.
So if you made your fortune in, say, manufacturing, you might look for direct investment opportunities in that sector.
Exactly.
Where your insights could really add value.
Right. But what if an SFO wants to venture outside their comfort zone?
That's a good question.
Yeah.
What if they see an opportunity in a completely different industry?
Right. Would they need to build that expertise from scratch?
Yeah.
Not necessarily. The report suggests that in those cases, partnering with another family office that does have that specific industry expertise can be a winning strategy.
So it's about building a network of trusted partners, each bringing their own unique strengths to the table.
Exactly. And that network extends beyond just other investors.
Okay.
The report also emphasizes the importance of having experienced advisors.
Like lawyers, accountants.
Yes, but their role goes beyond just the technical aspects.
Okay.
They can be valuable sources of deal flow, provide guidance on structuring and negotiating transactions, and help ensure the SFO operates within industry norms.
So it sounds like having that seasoned guidance could be crucial for SFOs.
It can be.
Who are new to direct investing.
Yeah, they don't have to reinvent the wheel or learn everything the hard way.
Yeah.
It's about building a strong support system
that
allows SFOs to navigate the complexities of direct investing with confidence.
This is all fascinating stuff. We've covered a lot of ground already, but I feel like we're just scratching the surface of this world of direct investments.
We are. And in our next segment, we'll delve deeper into some of these strategies, exploring their potential benefits and challenges in more detail.
Sounds good.
Yeah.
I'm eager to hear more.
Welcome back. Let's unpack some of these direct investment strategies.
All right. So we talked about partnering with independent sponsors.
Right.
And we've talked about prioritizing deal sourcing.
Mm-hmm.
But I'm really curious about this co-investing thing.
Yeah.
The report seems to suggest it's a powerful tool.
It is.
But also a complex one.
It can be, co-investing can take various forms.
Okay.
And the structure you choose can have significant implications.
Okay.
For instance, you could have a side-by-side arrangement where each party invests independently but alongside each other.
Okay.
Or you might have a lead investor who takes the reins on due diligence and deal structuring with others following their lead.
So there's a spectrum of involvement.
There is.
That makes sense. But why would an SFO choose to co-invest instead of going solo on a direct investment?
Well, there are several advantages. First, it allows you to spread risk.
Okay.
Instead of putting all your eggs in one basket,
Right.
You're diversifying your portfolio by investing in multiple companies alongside your partners.
That's a classic investment principle.
It is.
But I imagine it's especially relevant in the world of direct investments,
right,
where the stakes can be higher.
Absolutely. And beyond risk mitigation, co-investing can also give you access to deals you might not have found on your own.
Okay.
Your partners might have different networks, different areas of expertise, different ways of sourcing opportunities.
So it's like expanding your reach and your deal flow exponentially.
Exactly.
What about the learning aspect? We talked earlier about how direct investing can be a steep learning curve for SFOs who are new to this game.
Right. That's another key benefit.
Okay.
Co-investing allows you to learn from more experienced partners.
Yeah.
Observe their processes, see how they approach due diligence negotiations, post-investment management. It's like a masterclass in direct investing.
Wow.
But with real-world stakes.
That's a valuable perspective. You're not just reading a textbook.
Right.
You're in the trenches with seasoned players.
Exactly. And this is where the report's emphasis on partnering with other family offices becomes really interesting.
We touched on this briefly before, but I'd love to hear more about why that dynamic is so unique.
Well, imagine you're an SFO that made its wealth in, say, the real estate industry.
Okay.
You're looking to diversify your portfolio and see an intriguing opportunity in the tech sector.
Okay.
Now, you could partner with a traditional PE fund that specializes in tech.
Right.
But there might be a cultural disconnect.
Yeah.
Their investment horizons might be shorter.
Yep.
Their risk appetite might be different. Their decision-making processes might not align with your family's values.
I see. So it's not just about finding someone with the right industry knowledge.
Right.
It's about finding someone who speaks your language, so to speak.
Exactly. And that's where co-investing with another family office can be so powerful.
Yeah.
They understand the nuances of multi-generational wealth management, the importance of long-term thinking, the unique dynamics of family decision-making.
Yeah.
There's a shared understanding that goes beyond just the financials.
It's joining forces with someone who gets where you're coming from, both literally and figuratively.
Exactly.
The report doesn't get into specific numbers, but I imagine there are some compelling examples of this kind of family office collaboration in the lower middle market.
There are. In fact, I recently came across a case study involving two family offices, one with a background in consumer goods, the other in healthcare. They teamed up to co-invest in a medical device company that was developing a revolutionary new product.
So they each brought their own expertise to the table.
Exactly. The consumer goods family office had deep experience in branding, marketing, and distribution, which was crucial for getting this new device into the hands of consumers.
Got it.
The healthcare family office, on the other hand,
yeah,
had the knowledge and networks to navigate the complex regulatory landscape of the medical device industry.
So it was a true synergy.
It was.
Each party leveraging their strengths to maximize the chances of success.
Exactly.
What were the results? Did this co-investment strategy pay off?
It did. The medical device company went on to secure FDA approval.
Wow.
Launched its product to great acclaim.
That's great.
And was eventually acquired by a larger healthcare conglomerate.
Wow.
Both family offices saw significant returns on their investment.
That's awesome.
Far exceeding what they might have achieved individually.
Wow, that's a great example of how co-investing, especially when done strategically,
it is,
with the right partners, can be a game changer for SFOs looking to make their mark in the lower middle market.
It is, but it's important to remember that co-investing isn't a magic bullet.
Of course. What are some of the potential downsides?
Well, one potential pitfall is misaligned expectations.
Okay.
If the co-investors haven't clearly defined their roles and responsibilities, if they have different investment timelines or different risk tolerances, conflicts can arise.
That makes sense.
Okay.
It's like any partnership.
Right.
You need to be on the same page from the start.
Exactly. And another challenge is finding the right partners in the first place.
Okay.
Building those trust-based relationships takes time and effort.
Right.
It's not something you can just rush into.
So it's back to the importance of networking.
Right.
Building those connections within the family office community.
Exactly. And that leads to another crucial aspect of direct investing.
Okay.
That the report highlights the role of advisors.
Right. We talked about lawyers, accountants, and so on. But why are they so essential in this world of co-investing and direct deals?
Well, their expertise goes beyond just the technical aspects.
Wow.
They can help you structure co-investment agreements, navigate complex tax implications,
right,
ensure compliance with regulatory requirements, and even immediate disputes if they arise.
So it's like having a team of experienced problem solvers on your side.
Exactly.
People who have seen it all and can guide you through the potential pitfalls.
Right, and beyond their technical skills, advisors can also be valuable sources of deal flow.
Okay.
They often have connections within specific industries.
Yeah.
They hear about opportunities before they become public. They can introduce you to potential partners or co-investors.
So it's like having an extended network of eyes and ears on the ground, constantly scanning the market for promising deals.
And that's especially valuable in the lower middle market,
okay,
where many of the most attractive opportunities are off-market, meaning they're not publicly advertised or shopped around to a wide range of investors.
It's a more exclusive world.
It is.
Where relationships and trust play a crucial role.
Exactly. And that's why building a strong network of advisors, partners, and co-investors is essential for any SFO looking to succeed in direct investing.
This is all incredibly insightful.
Good.
I feel like I'm starting to get a real grasp on the nuances of direct investing.
Yeah.
The strategic approaches involved, the potential benefits, and also the challenges.
It's a complex landscape.
Yeah.
But with the right mindset and the right team, it can be an incredibly rewarding one.
And I'm sure our listener is eager to hear about what action steps they can take to explore this world further.
Absolutely. We'll dive into that in our final segment.
All right. So we've explored the what and the why of single-family offices getting into direct investments, especially in that lower middle market space. But let's get practical for our listener here.
Okay.
If they're intrigued by all of this, what are some concrete steps they can take?
Well, I'd say the first step, even before you start looking at deals or sponsors, is self-reflection. You know, what are your true investment goals?
Yeah.
What level of risk are you comfortable with? And crucially, what are your strengths? Do you have deep knowledge in a particular industry? That's a huge advantage.
So it's not just about chasing returns.
Right.
It's about aligning your investments with who you are.
Exactly.
Both as an investor and potentially as a family.
As a family, exactly.
Okay. So once you've got that internal compass set, then you can start thinking about partners.
Yeah.
And as we've discussed, independent sponsors can be a fantastic way to access deals.
Right.
Okay. So let's say our listener has done their homework. They know their goals. And they're ready to explore working with a sponsor. Where do they even begin? Is there a sponsor directory out there?
Not exactly, but there are resources. Industry publications often feature profiles of sponsors, highlighting their areas of expertise and track records.
Got it.
Online forums and networking events specifically for family offices can also be valuable for making connections.
And I'd imagine referrals are gold in this world, right?
They are.
Getting recommendations from other trusted SFOs.
Absolutely.
Who have already worked with sponsors.
Word of mouth is invaluable. And when you're vetting potential sponsors, don't just focus on their deal sheet. Dig deeper. What's their investment philosophy? How do they approach due diligence? What's their track record, not just in terms of returns, but also in terms of communication and transparency with their investors?
So it's a lot like choosing any business partner.
It is.
Looking beyond the surface to make sure there's a good cultural fit.
Precisely. And this brings us to the second action step. Start building your network. Attend industry conferences, join family office associations, reach out to other SFOs, even those outside your immediate geographic area.
Because as we've discussed, co-investing with other family offices can be incredibly powerful.
It can, and those relationships don't form overnight. It takes time to build trust and mutual understanding. So start planting those seeds now. Engage in conversations, share your insights, learn from others' experiences.
And don't be afraid to ask questions.
Absolutely.
Especially if you're new to this world.
Most experienced investors are happy to share their knowledge and insights. It's a collaborative community.
Awesome. And finally, the third action step,
Right.
which is relevant throughout this journey, assemble your team of advisors.
Yes.
Okay, so we're talking lawyers,
Yeah.
accountants, tax specialists, the whole shebang.
Yes, but think beyond just the technical roles.
Look for advisors who understand the unique dynamics of family offices.
Right.
Who can provide strategic guidance.
Yeah.
Who can be sounding boards for your ideas.
Okay.
And don't underestimate the value of mentors.
Mentors.
Yeah.
So someone who's been through this direct investment journey before,
Right.
and can share their wisdom.
Exactly.
Yeah.
Someone who can help you avoid common pitfalls.
Yeah.
Someone you can call when you're facing a tough decision. Someone who can champion your success.
That's a great point. It's easy to get caught up in the numbers and the deals.
It is.
But having that human connection, that experienced guide, can make all the difference.
It can. And remember, direct investing is a marathon, not a sprint.
Right.
It takes time, patience, and a willingness to learn and adapt.
Yeah.
But the rewards, both financial and personal, can be significant.
This has been such an insightful deep dive.
They have.
I feel like I've gained a whole new understanding of this world of direct investments.
Too. And how single-family offices can really thrive in it.
It's an exciting space to be in.
Yeah.
And the opportunities for SFOs are growing all the time.
So to wrap things up for our listener today,
Okay.
remember those 3 action steps.
Yeah.
Define your investment goals and know your strengths.
Right.
Start building your network, especially within the family office community.
Yep.
And assemble a team of trusted advisors and mentors to guide you along the way.
Couldn't have said it better myself.
And if you found this deep dive helpful, be sure to check back for future episodes,
Yes.
where we'll explore other fascinating topics in the world of finance and investing. Until next time.
Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.